Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Ruben Wilcock of Blackfinch Ventures to talk about the Blackfinch Spring VCT. Hello Ruben, welcome to the studio. Firstly, could you tell us about Blackfinch Ventures and your own experience?
Yeah, sure. So we're multi-asset investment specialists at Blackfinch. We've got approaching 700 million assets under management. But the important thing is we're an entrepreneurial firm. We were founded by an entrepreneur and we like to serve clients that understand why innovation really drives investment returns. So that might mean anything from helping you manage family wealth all the way through to companies managing the cash on their balance sheet. But what I do is I manage the ventures side and we look to invest in the most exciting high-tech, high-growth companies in the UK today. And you asked about my background, it's a bit unusual. So 20 years ago, I did a PhD in microchip design. I did a few years of doing fascinating things across research, tracking honeybees by developing tiny little trackers that sat on their backs, developing telemetry systems to help solar-powered boats win races. But what I loved doing was trying to take that technology and bring it to market. And so I helped Southampton University to do that over sort of 5-6 years, patenting technologies, licensing, commercializing, spinning out. And I did that whilst I did my own startups. And when I sold one of those quite successfully in 2014, I then founded an accelerator called Future Worlds, where we helped about 50 companies to launch through that platform. And then I joined Blackfinch. And my experience is not unique at Blackfinch. So we have a number of people that have this kind of founder-based background as well.
And so we're here today to talk about the VCT. What does it aim to do for investors?
So what the VCT is really looking to do, the Spring VCT, is to expose clients to the growth opportunity that you see in some of the most exciting tech companies in the UK today. So these types of companies are run by founders that win awards. We've got founders who have 30 under 30 Forbes awards. We've got founders with products that are really disrupting big industries like rail, like advertising, like marketing, recruitment. And we like to see them do that. We like to understand how they're going to shape those industries and become a major player. And what we have as a VCT is, because we're a slightly younger VCT, we've got 19 companies. So the really exciting thing about the Spring VCT is that when we get an exit, it's going to have quite an appreciable change on the NAV, and that means that you could get some very interesting dividends.
And so what types of companies are you looking to back within the VCT?
So we invest across sectors. We typically invest into companies that are doing anything from about £500,000 revenue a year to say 2 million revenue a year. And we're looking at companies that are really trying to disrupt and change the markets that they operate in. And we like to invest in companies where we can really make a difference as well.
Is there anything you avoid?
There are one or two areas. So for example, life sciences, what we find is that there are very long time to market opportunities, which doesn't quite fit our mandate. We tend to avoid companies that are kind of really following a very big hype cycle, overvalued, and there might be lots of people piling in, but often that comes with a bit of a surprise down the line.
And so management teams, then, what are you looking for in a good management team within these companies?
So we look for three things, actually, in particular. We look for a hacker, a hustler, and a hipster. It's an interesting little sort of way we describe it. And the hacker is really someone that understands the tech deeply, that really obsesses late into the night about writing the code and getting that product to work. And then the hustler is the closer, someone that is able to close deals, hire great people into the company, close investment. And then the hipster is someone that understands people. So they understand growth, they understand how to bring great products to market. So we look for those types of characteristics. One of the things I learned when I did my accelerator was that you can actually teach and coach anyone to give a really good pitch for about an hour, hour and a half. So one of the things that we do is we go deep into our pitch sessions, 3-4 hours. We speak to everyone in the company to really get under the hood of who those founders are.
Could you, within the VCT portfolio, you mentioned you have 19 companies now. Could you give us some examples of recent investments you've made?
Yeah, absolutely. I'll tell you about two. So one really quite recent is a company called Currency, and this is an absolutely brilliant company that uses open banking. I'm sure you've heard of open banking. Mm-hmm. If you go abroad on holiday, then you have a high street bank account, then you spend on your debit card, on your credit card, you get absolutely hammered for fees. And often you don't realise it because it's hidden in the exchange rate or in various different places. But if you went to, say, Florida for a week or 2 weeks, 3 weeks, you could easily pay £100, £200, maybe even £300 in fees just using your high street bank account card. Now you could go to Monzo, Revolut, you could go to Challenger Bank, you could get a payment card and you could top it up and then go and you'd benefit from the lower fees. But it's a pain because you've got to top it up. You've got another bank account. Now, what Currency does is they layer open banking on top of your normal high street bank account. And so you benefit from the lower fees, you benefit from that challenger bank experience through the app, but you're not paying the fees that you would do if you used your own credit or debit card. It's doing really well. We invested a few months ago. It's already smashing its targets, and we're excited to see where it goes next. The second company that we invested in a bit earlier in the year, in April, is a company called Placed. And what they're doing is they're really disrupting the kind of recruitment industry for the services sector. So we kind of like to think of it as hiring smart. So when you apply for jobs, there's lots of churn in that sector. When you apply for jobs, you're not uploading your CV, you're not writing an application letter, you're answering really clever surveys, questionnaires to really understand you as a person. So they're doing that smart. And then they're doing the matching smart as well. So they're using AI algorithms to take all of those applications and filter them down to the point where you're not having to go through so many. And then they're also engaging much more with employers before, during and after.
And so what about some of the more established holdings in the portfolio? The VCT's a few years old now.
Yeah, no, we've got some really good ones emerging, and I'll try and tell you about some different ones maybe to last time. So Illuma is a great company that's doing fantastically well at the moment. This is in advertising technology. And what they do, so let me give you a pitch. So the Wealth Club, you want to advertise over social media, if you could, you probably can't, but over social media about what you do. What you might normally do is plan that campaign. You might target a demographic, go out there, see how it performs, run the campaign, analyse it, come back, and then run another one, put some more money in. What Illuma does that's super clever is that live during the campaign, it's working out how it's accessing different demographics, and it's changing that campaign and the access to different demographics as it goes along. So you're getting way better return for your ad spend, and it's all happening automatically. And it's happening without using cookies, it's happening without using your personally identifiable information. So it's totally kind of set up for the future, and it's very sort of privacy aware.
Interesting. Any other examples?
Yeah, we've got another great one called Tended. And see, the thing about Tended is it's an EIS company that we had, so we knew it really well. And this is one of the great synergies, having an EIS and a VCT, and the VCT is slightly later stage. So we've known this company for a few years. And the VCT took a tentative check in it about a year and a half ago. Now, what that company has today, and it's really an inflection point, is they have the only solution really in the world that without any infrastructure allows you to position workers to within a centimetre wherever you are. So it's really for the rail and the construction industry. And now you'd be amazed that on the rail track today, people work in the middle of the night on live tracks, and the way that they tell if a train is coming or if they're on a live track is someone stands on the track with a megaphone and watches for the train, which is crazy. So what Tended allows them to do is it allows them to position themselves to within a centimetre, and you set a geofence around those live tracks, and the moment they deviate, walk into those danger areas, it immediately notifies them and shouts and screams. And this is really going crazy because now they're approved for the rail industry, and it's a real inflection point for that company.
So besides funding, what do you do to help these companies succeed?
So we're a team of ex-founders. We've kind of been there, we've raised money, we've exited companies ourselves, and so we use that experience to help our companies on a day-to-day basis. But we also have a network of over 90 venture partners now, and they span all industries, all levels of experience. So if you're a company and you need help with marketing, if you need help with going overseas to the US, if you need help scaling your sales team, the chances are we will have a great fit in our network of venture partners. And then beyond that, we've grown this really strong network effect in our portfolio because it's growing so much now. So just last week, we had a founder event here in London where we had all the companies come along, sharing ideas, sharing contacts, talking to the venture partners, talking to the NEDs. And then we also run webinars. We had one last night that was around dashboarding, helping you to develop a sort of data-driven business. And we even have a WhatsApp group where they share ideas. So the time it took me to have a shower the other day, someone had asked a question on the WhatsApp group and 2 or 3 people had answered. So it's a really good kind of community of founders that are helping each other along with our own experience and that of our venture partners.
So changing topics slightly, 2022 was a year that saw financial markets become more volatile. How has that affected both the way you invest, but also your underlying companies and how they perform?
Yeah, so I think really what we've done is there's 2 things here. So our existing portfolio, we've worked with those companies really, really well to try and understand the implications on their runway, on their cash flow, how they're planning for the future. So we've been working with them on their financial modelling. We've been working out whether they should, put the foot down a bit more if there's an opportunity, or ease back a little bit and conserve the cash. And we're also working out their funding requirements. So we're building that into our plans for the coming months as well. So that's on the portfolio side, and that will continue, really well into 2023. And then what we're doing really on the new investment side is we're definitely not looking at companies that are kind of the growth at all cost, high burn opportunities where if it goes wrong in a big way. We just don't really look at those companies at all. What we try and focus on is companies that have really strong underlying foundational unit economics, strong teams, strong products, strong growing markets. But particularly now, companies where the founders have evidenced their ability to keep on top of the capital efficiency in the company. So they know that when they see an opportunity, they can go for it. But when there's difficult, challenging times, they know how to cut back, how to conserve cash. And that for us is becoming really important.
Have you felt the need to revalue the portfolio for changes in the stock market?
So any VCT that uses IPEP guidelines has to take into account listed market movements in their valuation policy. So our valuation policy and all of our companies are audited in terms of valuation each year by BDO. It really uses three things. So it uses the underlying performance of the companies, which is maybe revenue growth or MRR, monthly recurring revenue. It then uses the impact of the markets, and the way we do that is we take listed stocks, baskets of listed stocks, and we look at how the multiples move there. And then the third thing is that we take into account the waterfalls of the company, the dynamics in terms of how capital would be distributed amongst share classes as well. So we absolutely do include in our valuation approach the listed impact of listed markets falling. But what's I think really good to see, what we're quite proud about because we are a relatively young VCT, is that although, as an example, the SaaS, the software as a service multiple has gone all the way down from 14 times, I think, back in December, down to 5 now. So it's a huge change, that impact on the valuation approach. The NAV that we've got, because of the underlying growth in the companies, it's only dropped by a few pence. So I think we're doing pretty well.
Are you seeing better valuations in the companies that are coming to you to raise funding then?
You would hope that you were seeing better valuations. What we're definitely doing is only investing now in companies where we can get those valuations to the right place. There are one or two founders that are sort of lagging that curve. And as hard as you try, they still think that it's a year and a half ago where valuations are a bit more punchy. So we're making investments now. We're looking at some at the moment where the valuations are really quite keen, and we know that those companies are going to have really good prospects of strong returns.
So what are the biggest challenges you face at the moment in this current environment?
So I think the biggest challenges really come back to this cash challenge, which is, wages are going up, it's more difficult to get hold of people, but ultimately it's about managing the cash you've got, your runway as a company, making sure that you can raise money when you need to, making sure you can get to that next milestone to raise that money. And that's something that, keeps us up at night, that we work closely with the companies on a day-to-day basis.
So changing topics slightly again and moving back to the VCT, exits, any recent exits to talk about? I know it's still early days.
It's still early days, so we don't have an exit in the VCT. What we do have now, which I think is a great sort of proof point of the team and of the processes, we do have an exit in the EIS, and it was in a company called Candid ID. And it was a company that would have gone into the VCT actually, but we managed to sell that one back in April, and that was a really strong return. So that gave many times the multiple of the IRR that we're planning for the VCT, for example.
And so how risky is this part of the market? At what stage are you investing, and then how risky is that relative to, say, other VCTs in the market?
So, as an asset class, it clearly is a more risky asset class, and that's why you've got the tax relief, that's why it's there. If you look in Europe, I don't know if you've looked at the McKinsey study, but of the 1,000 top fastest growing companies in the whole of Europe, 319 come from the UK, and it's because of EIS and VCT. So we're really well placed to inject private capital into space, which is great. In terms of how risky it is, well, we obviously try and diversify that risk through across sector, across stage. We have all of our filtering processes, our due diligence, all our bench partners, our own experience. We're investing in the kind of what we call the seed, Series A type stage of investment. And you might say that maybe a third of companies won't make it in that space, but the reality is we're much more interested in making sure that we're in the companies that will make it, because you've only got to have a small number of really high return companies to offset the ones that don't work out.
And so how's the performance of the VCT going as a whole?
It's going really well, considering the macroeconomic environment. So as you know, when you launch a VCT, and we're only sort of 3 years old or so, made the first investments in 2020, what happens is you start out and you start to invest, and that kind of NAV goes down a bit as the cost of the VCT come in, and then as the companies start to grow, it sort of comes up. You have that J curve. And I think it's reasonable to say that we were sort of at that point in the last few quarters of coming back up, and then the market has come in and sort of just held us down a little bit before. But the underlying growth of the companies, all of the companies are growing well. You know, we're really happy about how that's going. So I think overall we're happy with the performance.
And dividends for the VCT, when are you planning to start paying?
So the plan has always been 2024, 5% dividends. We still think we're on track for that. And again, it's because of the underlying growth of the companies. So it's really difficult when you're trying to communicate this, that, you know, you've got the market impact coming in. You have to bring that into your valuation methodology. That has to be taken into account on the NAV. But the underlying companies are doing really well. So we're confident on the 5% dividends from 2024.
So to sum up then, Ruben, for those who want to invest in a VCT this year, why should they invest in the Blackfinch Spring VCT?
So we are, as I said at the beginning, we are an entrepreneurial firm. This is a younger VCT, so the impact of exits are going to be quite interesting on the NAV, so it could be quite exciting. We're a team of ex-founders. We've been there, we've done it before, we've founded companies, raised money, exited companies. That's why founders choose us. That's why venture partners choose us. And I think if I was an investor, that's why I would choose us too.
Ruben Wilcock of Blackfinch Ventures, thank you very much.
Pleasure to be here.
If you are watching on YouTube, please press like and subscribe to the channel for more.